Eric Mwadid, with the world market analysis for the weekend of May 2nd and May 3rd, 2015. Keep in mind that most world markets were closed on Friday for Labor Day. But let's take a look at how the last trading sessions for the week for Asia was. We see a little bit of a unchanged in the Japan market. China was slightly down, Hong Kong was up. So let's call it a mixed picture. Europe was also mostly closed for Friday, again for Labor Day holidays, and we can see that they did close the week with a little bit of a mix to up session there. And if we take a look at currently what's going on in the US, well, let's go to the Americas, take a look at Brazil, and we can see that Brazil is having a good session, up 1.63, and I'm not sure that it is trading today on Friday or not, but that's fine. S&P slightly up 0.66%, and we are looking at Canadian market also up 0.6%. So let's go to the charts, and we begin by taking a look at the Canadian market. As you can see, it is down this week about 0.53%, and it is still struggling to hold above the line we've been talking about the last couple of weeks, which is this simple line on the weekly RSI, where it has been stalling. And let me just go ahead and show that. When it's going down, it seems to find resistance on this level, as you can see, and even here was resistance, double top resistance here during this period, and a pullback. And we can see that if this continues to show double top, then we should expect a pullback also. Otherwise, for this market to do well, it needs to be holding above that line and trade above that line to at least change the direction of the market. You can see that above the line the market has been bouncing, as can be evidenced by this period here where it was trading above that blue line, which is this period from here when the prices jumped higher here to new highs, and it stayed above that line until some point here. So that was a very good tell on when the market turned sour. So as long as the market can stay above the blue line, it's good. Otherwise, if it coils and shows this double top on the weekly, we should expect it to be seeing a pullback. If we take a look at the daily for the Canadian market, we see that having a nice bounce on Friday here, up 0.66%, jumping nicely and showing support at the 50 level of the daily chart. Now you can see that the RSI has been for quite a while coming back to the 50 and holding. Let's go back to 2014. The 50 has been used as an excuse to launch moves higher, and all these moves come with uniform activity below 50 back above it, and recently even this was below 50 back above it for a nice re-entry into the market, and we see that this is uniform activity to the line and back above it. So that makes sense that we are starting to see like it is a good move. Obviously, if it's gonna record new highs, the first thing it needs to do is take out recent daily closing highs at 15,450. So that's why it needs to be breaking out. Anybody who wants to play momentum needs to watch and see whether it can jump above that resistance area. Let's take a look at the Brazilian daily, and we can see that it has been moving well ever since it moved above this previous declining resistance line here. It jumped above that line, came back and back tested the line, and since then it's been drifting higher. We can also see that on the daily chart RSI, that this line here was the breakout line, the previous resistance line. Once we broke out above that, which was this entry again here in price, we've come back to test the same line on two occasions, which is here for this nice re-entry, and also over the last couple of days we came back to that level and held, which is the reason why the market seems like it is bouncing on Friday. So that line held, which is good, and anybody looking to play breakout here or to watch for momentum, if it can clear recent daily closing highs at 56,594.22, any close above that would be a fresh breakout indicating that it has a chance of trading higher. If we take a look at the French market, the French CAC daily, we can see it had come back to the 50-day moving average as of Thursday's close, and we can also see that it is showing a line of support like this if we extend it that way. Now this line connects to previous lows here, here, and now here, which is a good level of support. So the suggestion there is that more than likely we could be able to bounce based off that, and also it happens to be a level where this market has been bouncing. And just to show you, the most recent bounce came on the line here, which was this lows, and also this bounce here, which was this lows here. And we recaptured above the green line here for this re-entry. So this is where the market has been bouncing. So we see two lines showing support here and also showing support here. As long as that is holding, I would expect the French market to be moving higher. Now this is similar to what is going on in the US. If you take a look at the S&P 500 daily, you're going to see similar type support. If you take the lows line on the S&P, is something like that. You can see that over the last day or so, the market did pull back to the support line, and we seem to be having a good session bouncing off that line. So I think the French market, just like many markets in this video, you'll see they're showing some type of daily lows line support, indicating more than likely there is a bounce going to take place worldwide. If we take a look at the German market daily, we can see that it is back to a line of potential support, and I'll show you that. Coming off these lows here, the market did see a nice move off the lows of October, moving to fresh highs here with a very strong push. So that movement began somewhere here. By drawing a simple line, you can see that's where the move began, and so we can extend the uniformity line like that to show where support can be in the future. And you can see that the market has been using that level for support previously here with uniform activity, came close there with uniform activity and held. And also we see that it did hold here as of Thursday's action. So more than likely, this could also be a level where it starts showing some stability after a recent pullback, and could be poised to go back above the 50-day moving average. Keep in mind the most recent pullback did come because of this increasing price highs, yet we saw that the technicals did not follow through. So that negative divergence could be the reason why the market had a slide in terms of price and in terms of the RSI. Otherwise, as of the close of the past week, this is now a level where one can look for re-entry into the German market after a pullback. If we take a look at the DAX from a weekly standpoint, we can see that it was previously trading in this multi-year wedge going back to 2011. Huge wedge or huge channel, price channel, as I can see here. And now the market, after breaking out above that channel here, has now come back to test the channel. So it's come back here to test the channel. If this holds, I would expect it to be bouncing higher also. If you take a look at the weekly RSI, you'll see that the previous momentum breakout took place at the beginning of 2015. So this breakout here in the weekly RSI began this breakout above 10,000, and so that was a nice indication of momentums. The market went to straight highs over a period of weeks there, and so this entry in the RSI can be followed for support down the road. So we've come back to a line extension this way, and so if this becomes support in the coming week or coming weeks and the market starts moving higher, then this is going to be a good place where traders can go along the market again, because it is finding support on both the price channel and the RSI previous ideal entry point on the weekly RSI. If we take a look at the FTSE, the London market, we can see just like the French market, if you draw a line connecting recent lows on the daily RSI, you can see that we've come back to a nice level of support there. So a bounce can be expected as long as that line is holding. And also you can see that it is back to test the 50-day moving average, which is holding. So on a short-term basis, this looks like this is where the market could continue to show some bounce. Keep in mind that the most recent pullback was well telegraphed by the market because of this improving highs short-term with declining technicals. In fact, connecting a line going back to 2014, March of 2014. So this is where the resistance line has been, and as long as the market is bouncing from the lows here, eventually if it needs to break out with momentum, it has to take out this declining line of resistance. Otherwise, for now, for the here and now, it looks like we are showing good support for a day-to-day bounce as far as that FTSE is concerned. Let's take a look at some Asian markets. We begin by taking a look at Hong Kong. And as you can see, Hong Kong did have a slight close, I believe it was on Thursday, and was back to test the recent breakout here at about 28,016 and did not close below that. So the recent breakout on a daily continues to look good. Keep in mind this market has been trading very well after this breakout and a spike in momentum over the last couple of weeks. This is absolutely amazing there. So good momentum. This market can still pull back even more and still be a healthy market because of this nice breakout. It is trading well above the 50-day moving average. Also, we can see that on the daily RSI, it broke out above this recent declining RSI line. So this entry here on the RSI is what began this nice move. And so we can even see that if we draw a line from there, as long as it is trading above that line where there was an ideal entry, even if it comes back and tests this line successfully and moves higher, that's going to suggest that it is still a good market. And what I'm trying to say here is that this market is going to stay strong for a while because the charts are going to take a lot of action before they can start breaking down. Again, as an example, just take a look at where the 50-day moving average is trading. So even if it were to come back to test the 50, that continues to be just a good pullback within a strong move. In fact, if we take a look at the weekly, we can see that the weekly did close positive and also continues to trade above 69.10 on the monthly RSI. So a lot of strength in this market, and it's going to be strong for a while, maybe weeks, months into the future. If you take a look at how the breakout took place on the weekly, the line connecting the previous RSI highs was broken, and ever since this breakout here above that line, this market has taken off. So as long as the weekly RSI is showing that the market is holding above this previous break line, this market continues to be strong. Down the road, it's going to come, probably test this line. If it holds, that's going to suggest fresh highs. So it's going to take many months for this to break down. And that's why I think it's an area of the world market that is showing new, recent momentum that should take the market higher in the coming months and weeks. If we take a look at the monthly for confirmation of strength, we can see that the RSI broke out here to 6-7 year plus monthly highs. So this is a fresh, great looking breakout on the monthly RSI. We continue trading above 69.1 on the monthly, which is again another sign of strength. And you can see that the price breakout took it to levels not seen since sometime in late 2007. So this breakout has been good. I think this is a strong market, one that should be seeing higher prices in the coming months. A quick look at China, and we can still continue seeing that ever since it moved back above 69.10 on the daily RSI, this market has refused to come down. Ever since this breakout here and this market moving above 69.1 at about, let's call it about 3300, it's been staying above that and continues to stay above that level. So as long as the dailies are holding above that threshold of 69.1, that's a good market. Same thing can be said about the weekly. As long as the weekly is holding above 69.10, generally speaking, something it has done since, let's call it about September, August of 2014 at about 2200. As long as the RSI is holding above that threshold over the next couple of weeks and months, the market should be okay, even with pullbacks. As long as the monthly is holding above 69.1, this is a good market. So that's what to watch for. The last time it did something similar to this was, let's call it mid of 2006 to early 2007 during this spike here. So yes, there could be more upside even with day-to-day pullbacks. Take a look at the South Korean market, and we can see that on the weekly we are trading at fresh highs after breaking out above this massive multi-year wedge going back to 2011. So this weekly chart wedge has been in play for a long time, and recently we saw this explosion outside that wedge, indicating that in the coming months and weeks we can watch this for leadership in the market, or at least for momentum. Even though it had a down week, the chart continues to be okay in my opinion, because it is trading above the RSI breakout line. So as long as it is trading above this line, this market, even with pullbacks, should continue being a strong market. If we take a look at the recent monthly chart, we can see that there was a price breakout recently, taking it to levels not seen since 2011. So this is a nice breakout, even with a slight pullback the last couple of days, last week. The market continues to look good. As of right now, the RSI is also showing signs of breaking out to multi-year highs on the monthly RSI. So yes, it could pull back, but as long as it is breaking out and as long as the price is holding above previous monthly closing highs, the market should be okay. Just like other markets, if we take a look at Japan, we can see the Tokyo market did have a strong pullback on Thursday, down 2.69%. And let me explain the reason that was a big day on the downside is because it moved below 50 on its daily RSI. So now we have to ask whether this pullback is due for a bounce. A couple of observations, as I've discussed in this video also, this market has been coming to the 50 level and holding recently, which was this entry at these lows. It held the 50 here at the end of March during this pullback, and now we are back around the 50 level. So that's one thing to watch for. If it can bounce just like the US market is doing on Friday, then this could be a reason why it could have a big session early on in the new week. Also, don't forget that this entry in the RSI, so this breakout level somewhere here just around 40, about 48 or 40, yeah, about 47, somewhere around there. Let me draw that again so you can see what I'm saying here is there was a breakout here on hindsight, and that entry in the RSI breakout was successful in moving the stock from these lows to multi-year highs here. So that was a good indication of momentum. If we draw a line off that entry, something like that, you can see that the stock has come back to test that entry level. So if that can hold, I would expect the Japanese market to be at least bouncing from current levels. It has also come back to a level around the 50-day moving average there. If that can hold, again, that's indication of a good market. If I draw the line connecting the RSI lows like this, connecting this low, this low, this low, through this low with uniform activity, connecting that low there, double bottom here, you can see that that line comes in contact exactly where it closed on Thursday. So to me, this is indication that this market is also poised to bounce on a day-to-day basis. If we take a look at the Australian market, which has been down huge the last 3 days after failing to break out, something similar to the US. So there was a couple of weeks here where we've been attempting to break out to new daily and weekly closing highs, and we seem to be failing each time. So that's a bearish signal, and the last 3 days can be a sign of traders giving up that the market can trade higher. Now you can also see that that corresponds with the RSI resistance line if you draw it like that, and connecting the highs here, this double top, and recently we connected there, which was off the recent highs. So that makes sense that the market did pull back. So the question is, what next? And I think to be consistent here, I see possibility of this holding, because if you connect the line connecting the lows and draw it like that, this is a logical area for support, because this line has held over a period of time. As long as the market is bouncing off this line, then I would expect some type of recovery here in the coming days. But if we break below that trend line on the daily RSI, if we break below that, that would indicate that there's more downside. So it remains to be seen which way the market is going to decide to go. So that line needs to hold on a day-to-day basis if the Australian market is to bounce here in the coming week. Now I just want to show you the monthly, and the monthly needs to break out above recent monthly closing highs, and the level to watch there is 5,898.48. If it can eventually break out on a monthly basis above previous monthly closing highs, then that's gonna be the indication that yes, the bulls are fully in control. For now, it remains a little bit suspect. In fact, if you take a look at the monthly, there is this line connecting the top side on the monthly RSI. This market seems to be struggling to hold above the top line on the monthly RSI. If the Australian market is to break out successfully, RSI needs to break out above the line of resistance on the monthly RSI, and also the price needs to break out above recent monthly closing highs. Let's take a look at two African markets. Again, we are taking a look here at the Nigerian market by way of the NGE ETF in the US, and we can see that it's come back on a weekly, as we discussed last weekend, back to a level of break, going off this break point here in the middle of 2014, which is off the highs here. And so we've been struggling since then with this big drop, which corresponds with the drop in crude oil. And so a line from here tells us where it could find resistance. And so I've been saying, as long as it is showing resistance on this line on the weekly RSI, I would expect that the Nigerian market can be viewed as one that is going down. Obviously, if this ETF can break out above recent weekly closing highs of 10.59, then maybe this market has finally managed how to break out from short-term resistance, and also how to move above this RSI trouble zone. So as long as we are showing resistance, I would expect this to be pulling back even further. Quick look at the daily. We can see that on the daily we are still forming a wedge as discussed previously, and that this wedge is still in play. Eventually the market decides whether it's going to break out or break down. Above the wedge is bullish, below the wedge is bearish. Any movement in either direction will decide the next swing trade. Obviously, on a day-to-day basis, if you are bullish, you'd like the market to take out recent daily closing highs at $10.94. If it can break out above that, that's great. Otherwise, there's another view on the daily RSI, this line extension, a simple line connecting previous highs. So connecting these highs here and here, the market did move above that, which was during this nice move here. Now it's gone all the way up and back testing this line. If this can hold and it bounces higher, then that would suggest that it is primed to move higher. So it needs to stay above that line, otherwise it could break below the line and start another drop short term. So below the line is bearish, above the line is going to be bullish. If we take a look at the South African market, which has been on fire the last couple of years, we can see that yes, it was down for the week, down about 1.45, but I don't think that's a big deal as of right now. Maybe things could change, but as of right now, you can take a look at the daily RSI, and you can see that there's even short-term reason to think that this could be support level here. Also, we are trading well above the 50-day moving average, so even a pullback that comes back to test an upward sloping 50-day moving average indicates a good market. So it can still even go much lower and still be in a healthy trend. If you take a look at the monthly, you can see that this market has been holding above 69.1 throughout the beginning part of 2014, which is during this breakout. And we continue trading above 69.1. As long as that's the case, I would expect this to continue trading well. So that's the level to watch on the monthly, which continues to be good. So this market should be at least trading well in the coming months. It's only when it moves back below 69.1 that we might start looking for reasons to turn bearish. Let's take a look at the ETF that tracks the Russian market here in the US, the RSX. And we can see that it is being tested again back to a level where it had broke, which was this break point in the weekly RSI, was off the highs of, let's call it about July of last year, June, July of last year, and it was down since then. Now it's back testing that break point. So as long as this is resistance, I would expect this market to pull back. In fact, that break point, if you can draw the line extension, you can see that it also gave you other periods where this market had to pull back after resistance. And also this break point here was off higher highs. So yes, around here we're either going to show resistance and this market pulling lower, or we finally manage to move above the blue line, which has been resistance, and now we can start building higher. For now, it looks like resistance in my opinion, and as long as that's what we have in front of us, we have to view this market as being a little bit suspect. Take a look at the daily. You can see that the daily, is trading okay, a little bit holding above this 200-day moving average, and maybe eventually we might have the golden cross between the 50-day moving average and the 200-day moving average. But I wouldn't put too much emphasis until the weekly chart looks a little bit better. You can see that recently we broke out above this line here in the RSI. So there was an RSI breakout here for this slight sharp move, but since then we've moved back below this previous breakout line. So again, not the best looking, and in fact, if it can break recent RSI trendline lows, if it breaks these lows on the daily RSI connecting these lines here, any break of this line could suggest that it is poised to go lower. So a little bit neutral on this one. The weekly chart again is where I think we should focus on, because the more it stays that it is showing resistance on this line, the more we should expect it to pull back. Otherwise, if it can hold above that line, then maybe it has begun a new bullish phase. Okay, so what I'm going to do here is now I'm going to go ahead and show you my analysis of the Indian market that I had recorded a day earlier. Remember, the Indian market was also closed on Friday, so the chart should continue being relevant. Otherwise, for subscribers, I'll be sending you guys part 1 of this weekend's US market analysis, and also I'll be working on part 2 of the weekend market analysis at some point during the weekend. Otherwise, enjoy the Indian market analysis that is coming immediately after this. Good luck, peace, and blessings. Woo! Yeah! Eric Muad with Muad.com for May 1st, 2015. Let's take a look at the markets here. We see that the close was another down day, down 0.71%. Let's take a look at the charts here, and it looks like we're still going to have the same conclusion as of yesterday, which is if we go to the weekly, we are still looking at the same threat of a break of a previous major line. So this needs to hold there. Going into the next 1 or 2 weeks, that's a major line that the market has to hold if it's going to recover. Okay, that's one way to look at it, connecting the lows of 2008 and through the lows of 2011 and 2013. That's one view. There's another secondary line that already seems to have been broken, which is recently, if you draw it like that. Well, it's not really a material break because we haven't concluded this week. Maybe by the end of the week, the market is going to be still showing that it could find support. So depending on how this develops, the more we trade below these two lines, the more we are below these two lines, and right now it doesn't look that bad, honestly. If you do it like that, right now you can see that both lines do show that this could be a level around here where the market could find support. So it's not broken on the weekly, so there's a little bit of a thinking there that the market could find support. If we go to the daily, we see that on the daily we had been talking about this line here, which has been previously been used as support, and now we are coming here and showing resistance the last couple of days, which was somewhere here. And keep in mind that we had this trend line that continues to hold, so that hasn't broken yet. And even if it were to break, a break of a trend line is not necessarily bearish. It just means that this thrust, this momentum has a little bit cooled off, and so the market can break and still be okay because it can move sideways. So a break is not material in my opinion. The thing that is key as far as I'm concerned is this line here, and trading below this line on the daily is a problem. As long as we are below this line, this market continues to be a little bit of giving us a little bit of a suspect look and feel. We see that we discussed the MACDs being below zero. That's a red flag. As long as the MACDs are trading below zero, that's not good. If we take a look at the hourly, same type conclusion from yesterday, which is surprisingly, despite the market going down day to day, if we take this entry here, which was off the lows, so this RSI level, number one, we are above that level. You can see into the last couple of trading hours we held there, which is good, and we also holding above the line I had previously drawn, this line here. So the market came back to that level on those both lines, the green one and the blue line. Of course, we can see here we did hold. So to me, the hourlies continue to look good, and also I do like this action where we are now above this node on the hourly MACD. Now the market looks like it could take out this node. In other words, it's preparing itself, in my opinion, to eventually recapture the zero level. So that's something we can watch. So I think the hourlies are giving the market hope that this is holding well. So the MACD is recovering. We are making higher highs in the MACD, as you can see, while markets are making lower lows. So that's one view. And the other view now is that there should be a line where if it breaks, then that's bearish, and it is this line here connecting the lows. You can draw it connecting the most recent lows. If this line holds, that's good, but if the line breaks, that would be bearish. So in conclusion, I think as we go into the new month, yes, a couple of things have not been right this past month, but as we begin the new month, now with the month ending with the RSI at 63, it would make sense if this market was to find support around here. And I'll say this because of previously, if we take this high here and draw a line from there, so bear with me here for a second. So that was a nice breakout which began this nice move, which corresponded with price breakout. So this move here began here, and so we can see that if we extend this line this way, something like that, this could become support on a month-to-month basis. And also there's another line like that, and I draw this line here because this was a major break here for sell signal, and it was also the same line extension was a sell signal here, which was off the highs of 2007, late 2007. So what I'm getting at here is this could become support on the monthly chart, which is where it closed for the month, and also the back test of this line here could hold. So if the market month to month can bounce now and start being positive, then that would suggest that the market is still very strong. Eric Mwathe, good luck, peace and blessings. Woo!